Hey everyone. So we are going to see if we can find some good plays today. So this is how I find my own plays every day. I sit in front of the live options flow tool for about 30 minutes. Then I post plays, then I make my own plays using my own money. But let's actually see how do we go from just looking at flow uh, to actually making plays, and how do you actually find good plays. So we are going to sort of this will be more like a commentary on how flow is looking, what flow is good, what flow is bad. So a couple of users requested this, so I'm doing this today. So we have started the day, and you can see we got some daily. So we got a Microsoft call to 90, price was 289. It was filled above ask, which is good. Like this means something. And about 400 k dollars were spent on it. I have my minimum premium set to 250k, and then I don't want to look at any spreads, and I only want to look at complex orders, which would be sweeps, splits, and block orders. So this is good. Like this would be a quick scalp from 289 to 290, and we are confident in the play because the markets are up pre-market, everything looks good, and then you can actually see here as well. Most of the flow is coming out bullish at the start of the day, which is always a good sign. Or you can actually just look at the net premiums based on what you're seeing here. As long as these are green, you want to make some bullish plays. This was a good one. Let's see where Microsoft is at right now. Okay, there you go. Like Microsoft is already at above 290. So this would be a quick, like a 2, 3, 5 minute scalp for quick 20 or 30% profits, because this was a short term. Yeah, this is expiring in like 8 days. So there you go. The first order that we got in the day was a nice win. So hope this helps. Let's see. Then I like this one as well. This was at ask. Price right now is at 218, and the strike was 225. So this is a big gap, but you can see that this is also for May 20th. So we have about 1 month left. So this won't be just a 5-10 minute scalp. This will be either a day trade if we actually get the full move today, or this will be more like a 2 or 3 day swing. And I actually shared these. Okay, so here you can see I actually just shared these, and yeah, 4 minutes, and we have already gone from 289 to 291. Let's go back. So these were the two orders that caught my eye. Amazon, sure, there is a $30 move, and again, the expiration is actually tomorrow, and 500k. So this seems like a good scalp as well. Again, because expiration is short, we have a $30 move. That's a move that we can make very quickly, and nice premiums like 500, half a million dollars is a good amount. So obviously the contract is a little bit expensive, so my account wouldn't have the money to trade this, but this one, yeah, this one probably I can. So when you see these puts below bid, that usually means that people are expecting the price of the stock to be above that. Like that's just one interpretation. They are expecting the price of the stock to be above that strike, and so this person might be expecting a reversal in Netflix because it went down about 35% yesterday. So they might be expecting the price to actually be above 275 by 29th April, so that they can keep all their premiums here. This is a good one. This is like when you see puts being bought at ask, you might think that those are bearish orders because these are puts and these are being bought, which is why these are being filled at ask, at ask price. But anytime the strike price is deep in the money and the stock price is like far away, that's generally not a bought position. Like this is just from experience, that's usually a sold position. It's just the case that it was just filled on the ask price, but mostly it's not really a bought position. So this person might actually be expecting again Facebook to be above 230 by May 13th. And so anytime you see these opening tags, this means that this order is for sure an opened order, and these are very powerful. So if you, let's say, see a $3 million order, it was opened, the strike price is it's a call and it's slightly out of the money. Those are good directional plays that you can make. And one sort of really good rule of thumb is you want to look at contracts where the strike and stock price is close to each other, like maybe like 10% within each other. If you start analyzing contracts or trades where the strike and stock are far off from each other, whether it's in the money, out of the money, you realize that it's very hard to manually sort of go with those plays or manually make plays based on those. That's just my experience. Obviously, other people might have different experience, but let me show you an example. So this one, TQQQ, the stock price right now is 50 and someone sold a put for 80. So they are expecting this to be above 80 by September 16. But one, there is a $30 gap, which is like 60-70% from the current stock price. Second, this has a lot of time. So don't use stuff like this for day trading or for scalps. You'll often see that you only lose money. You can see there was another Microsoft call, good one. So we are just getting more confirmation for a move. Okay, this is still, let's see. So NVIDIA, we had NVIDIA, right? And okay, there you go. So 222, let's see where that order came. 218. So we have already, again, so this would be a day trade, not a scalp. We have already made a $4 move from 218 to, we are now at 222. And we actually, I believe we went above 222 as well. Let's actually take a look at that. Nvidia. Let's pull up the 1 minute chart. All right. So the high was 223. Let's see, 223.89. So we actually went from 218 to 224, which would be a $6 move. It was a short-term contract, just 1 month until expiration. It would have easily given you about 20%. So again, those were the. Here's a quick, good tip for you now. So let's say now this went up, you couldn't catch the move. So what you can do is pull out the 1 minute chart and draw the anchored VWAP from the low of the day, or from the start of the day if we if we started rallying right away. And then anytime the price falls on this anchored VWAP, there is another entry that you can take. So just keep that in mind. I use this to scalp all the time and it works pretty well. Let's see if this comes down. So this chart is updated every 30 seconds. So again, we are not a charting platform, so we don't do 1 second updates. But if this falls, let's say on this point, then we'd probably look to sort of make a day trade again if we are doing day trades. Otherwise, if we are swinging this, then we just forget about it until it either hits a profit target or it hits a stop loss. Okay, so now it actually broke this anchored VWAP. Not really. So now we are at the support of anchored VWAP. So we'll wait until we see a small green candle here and then we go in. That's just some added confirmation. Otherwise, some people actually, as soon as it hits support, some people go in. That's okay, but some people want to see some confirmation before they actually play this. This anchored VWAP is being fishy right now, so let's just. Yeah, so this is at level. We can actually just draw this level. All right, let's say this is the level. So let's just keep this right now, and we are hoping that we are going to reverse. Let's see if we are getting something good here. I typically like to see orders where things are being bought instead of being sold. So even if puts are being sold, sure, that's a bullish sign, but I'd rather look at calls being bought, because just those just from experience, puts are really good. Puts being sold are really good for timing bottoms. But if you really want directional, fast, momentum-based plays, then it's good that you're seeing a lot of call buying. All right, so we have been respecting this level, as you can see. If we break it, sure, let's say our stop loss has been hit, but again, we are expecting this to not break so that we can have another day trade on it, on this. Here's an interesting one. So for American Airlines, you can see, I believe it moved like 7% pre-market, but people are selling calls for a strike that's slightly lower. So when you see that, that's a sign of caution where people are not comfortable in the big move that is being that is happening. So just stay cautious because price can actually come down very quickly, because these people, they're selling calls, they're collecting profits, and selling call is a slightly bearish signal, and the strike is slightly lower than the spot the stock price. So they're expecting, maybe like in the next 1 or 2 months, they're expecting the price to come back. Still sort of respecting that level. Yeah, so you see flow was really good at the first 2 minutes. Then we got some quick moves, 4, 5, 1%, 2% moves in almost a lot of stocks. And then you can see things are starting to get a little bit muddy. So that's your sign. Like if for the first 10 minutes, you had like Microsoft and Nvidia as two scalps, you went in, you got out with 20-30% profits each. And now you're waiting for something to pop up here. This is not like, what we're seeing here is not looking that good, like lots of red on the side. So this is the column that I keep an eye on. When I see a lot of green, I want to make a play that, because I'm a bull and I'm always bullish. And if I start seeing a lot of red, then I either want to exit my day trades, obviously not swing trades. I either want to exit my day trades, or I want to at least stop scalping for a while. Because it's not just, as you can see, it's not just American Airlines. People are, these flow traders are selling calls on other airlines as well. And you can see this is starting to come, things are starting to come down now. Let's see. So and we had an Amazon one for 3150, right? Let's see, where did it go? So the top was 3134. So we were short $15. So not that good. Here was it. So 312. So only a $14 move. We expected more. It was above ask. It was a good one. So we expected, we still expect a higher move. And even with this, so here's where your anchored VWAP, and this is like, again, it's being fishy. So this is the support. So at this point in time, we are expecting a reversal from the support. If we don't get it, we do want to see a couple of 1 or 2 good green candles. If we don't get it and this actually breaks this level, then we want to stay away from any bullish plays for time being. Again, lots of red, so I don't like seeing that. And the set of filters that we have in front of us, 250K, complex and known spreads, and then I am skipping SPY, Apple, Tesla, stuff like that, because those get a lot of flow. So then this sort of visual that you have in front of you, this view gets muddy because of all the flow that's coming in those names. So I want to exclude those. This actually sort of set of filters, you can see now the net premiums have turned negative, which means you either start to look for some bearish plays, or at least get out, stay cautious with your bullish plays. And this is mostly just for day trading and scalping. obviously if you're swing trading, then your stops would be there, you'd have more time, stuff like that. But since we are just looking at flow for 15 minutes of the day and we are making plays based on that, we, we are obviously going to talk more about day trades and scalps. So I don't like this. 108, strike is 95, so that's a pretty decent move. Someone spent 500k on that move, so obviously they might be expecting something. So don't like this one at all for obviously a bullish play. So when I'm seeing this flow, I do keep this in mind. And so now that we have seen this big order, there's a which is expecting the price to go down substantially, I'll actually stay away from Roku. Let's say if I see a couple of more orders and they're all puts being bought, then I'll want to stay away from Roku for any bullish plays. Okay, so now you can see we actually broke this one. So we broke this level. Now you're not going to do any bullish play in Amazon until we either regain some levels or do something else. But this, anytime, so let's say you entered here, this would probably be your exit. Like you get all out here. I'm probably hoping, I think we broke this one in NVIDIA as well. Let's see. Yeah, we probably did. Yep. We tried for a couple of minutes, but we bulls couldn't keep the price up, and now we have gone down. So again, no bullish position right now, and as you can see again, this, let's see, so 942, you can see at 942 things had started to go very bearish, and what happened, we couldn't sustain the levels that we had drawn, and mostly you can see these things in flow before they actually before they are there actually in the price action. So this sort of just looking at live options flow for the first 30 minutes and making scalps or day trades, that's a really good idea. And just spend time on this. Obviously it's not perfect, you do need to sort of understand where the flow is going, you need to have a bigger picture how the price action is looking. But we have just gone over the flow, we have talked about a few plays and they have been working well. I did expect that these Nvidia, Microsoft and Amazon were going to reverse from these anchored VWAP supports. This generally happens most of the time, but if it doesn't, then you know that the market is not as strong as you might think. So just keep that in mind. And another good tip here, so give me a second. So now that we had an anchored VWAP from the bottom, you can also draw an anchored VWAP from the top, and you don't go in until we break this level now. So because now this is the level that the shorts are playing. So anytime we touch this level, shorts might actually come in and they might short this stock or more. They might short this stock more. So you need to be careful of that. So now we sort of stay out until we actually break this level. So this is the anchored VWAP from the top is now a level that we want to look for if we want to go into bullish plays. If this doesn't break, then we want to remain out. All right, look at this. So Microsoft, we caught it at 289. Then we saw some other flow for some other bullish flow. Now it's at 293. So there's your really nice play. You can see some sort of calls above ask, at ask. Some good things are now starting to come. So you can see how there are some signs in the flow as soon as or before the move in the price action starts to happen. It's really cool. Like, do this every day for a week or two, and you'll be like amazed at how well this works. So this is a good one. Like, this would be a very high risk, high reward play because we only have like 1 week. Someone spent 350k expecting the price to move towards 225, which is now this could be an earnings play as well. So if there were not earnings, I think earnings are either this week or next week for Facebook. This would be a really good flow. But now that their earnings, options flow is not that good in predicting earnings, so stay away. Or but if we did not have earnings, now this would be a really good sort of high risk, very high reward play, because someone is expecting a $25 move within, let's say, a couple of days, and they are spending 350K on that. This is good one. So this would be a quick scalp now. This is an open order, $1 million. No, maybe a day trade, not a scalp, because expiration is 1 month away. But we do expect the price to quickly reach 35 strike. Let's see, where is it? KBH. There you go. Like, it didn't take a minute. Like, and this is like a very common pattern. You see some big flow. Now, why does that happen? A lot of new people and even I think experienced options traders don't really know about this. So when someone bought this $1 million, when someone opened this $1 million position, they bought a call, right? Because it's above as, it was filled above ask, so it was a very high with a very high probability of bought position. So they bought a call. So then the market makers were the ones who sold the call, and the market makers never want to have a direction. They always want to stay neutral. When they sold a call, selling a call is a bearish position. So now when they sell a call, they want to hedge that by buying the underlying shares in KBH. So someone is spending a lot of money on buying calls, market makers are selling that, but as soon as they sell it, they are sort of making sure that they are hedged by buying tons of shares in the underlying stock as well, and those shares are obviously related to the delta of the contract plus the premiums. And so that's why you have now two forces: people are buying calls and market makers are pushing the price higher as well, because they are buying a lot of shares. So that's why you'll often see when there are large premiums and open positions, there's a quick move up, and you can see that here. And I was talking about resistance levels. I'll show you a good example. Here you go. This is why you don't look at these three candles and think, oh, let's go bullish again. No, don't do that. Like, that's a disaster. You can see we went up, but we couldn't break resistance, and now we are going down. So these anchored VWAP levels, these are some of the best. This one technical indicator is all you need in markets. Like, I am so sure of that. You don't need MACDs, RSIs, or anything. If you understand anchored VWAPs, you'll have a great time trading based on certain levels, based on support and resistance levels, drawing your own levels, stuff like that. It's really useful. All right, let's see. Again, we don't like seeing the, but again, you see this Netflix one, price is at 217. Someone didn't really sell a strike price, a put of strike price 295. This was probably actually a sold position. Someone didn't buy. This was probably a sold position, because the put strike is far in the money. Again, this is just experience. This could be a bought position, but you'll often see that that's not the case. Airlines are getting some bullish flow now, but there was a lot of bearish flow before, as we saw. So I'm going to do this for four more minutes, and then I'll stop. You see, this is why you don't always play earnings with flow. We were looking at some really good flow. Again, this was really good because someone was expecting a huge increase in price, but now we are starting to see some bad, like some bearish flow as well. So when I say good, I'm in bullish. Now we are starting to see some bearish flow as well. So flow is generally either not very reliable or not very clean when it comes to earnings. If it is, then it's just one data point. Like, if you really want to YOLO your money, so Tesla's flow yesterday was amazing. We shared it on our Twitter. If it's like, if just consider that as one data point of many. Don't just base your earnings play based on flow. See, like you would have lost all your money if you scalped, or maybe if you had a day trade from here onwards, because two candles, like 2 minutes, and you are down. So you usually want to have sort of a confluence of flow, anchored VWAP, and sort of some price action. And that's the best case scenario in terms of playing the first 30 minutes. That gives you countless amazing plays every day. I'm honestly not exaggerating. I've been doing this for like 2 weeks now, and it has been just amazing. Obviously, I had to make the video today, so I couldn't trade, but I hope this was helpful to all of our users. Just sort of keep it simple, like use the flow only large orders. uh, Use the flow if it's an open position. If it's above ask, obviously that's much better, but use the flow, use this anchored VWAP levels, get out quickly when you are losing. So if you did not get out here, then again you would have lost a lot of money. So get out when levels are broken, and yeah, combine multiple things. Like we have like price action, let's say support and resistance level. So let's say uh, y- generally you'll see that once we hit the low of the day, so the low of the day is actually high of yesterday as well, so this might be a support level that we want to look for. So let's say when we hit this level, flow is coming out as we are seeing some calls being bought. That would be, we would like to then make a bullish play. Let's say we hit this, we see a couple of one or two green candles, then we'd make a bullish play. Yeah. And another tip, when you have these anchored VWAPs from one point and you hit them and you start to go down again, you can that's another anchor. So now you can anchor your VWAP from here. So this would probably be, if let's say we touch this and we start going up, then let's say you want to have a scalp from here to about here, because this is probably the point where anchored VWAP is going to be once you go up. If we break it, then you can either go into a new position, or then you actually wait until we break this one as well, and then you go into, let's say, a bigger position or another bullish position. So it's about 30 minutes since market open. I really hope this was useful for you. I just wanted to provide a very rough and sort of informal commentary on how I trade and how I use my own platform, our own platform. And again, I hope this is useful for you. Thanks for watching. Have a great day. Bye.